Ladies and gentlemen, have you heard of this notion that the Chinese economy is going to overtake US in the near future? Well, today Premier Li Qiang of China just came out and made a statement, and this would basically give you the answer when China or if China is going to overtake US. Let's watch on. So for those China bulls, people who are madly and insanely, in strong belief that Chinese economy is one powerful engine that will overtake China, overtake US and probably reign for the rest of the world, let me categorically say that dream on. Okay, this is not my analysis. This is basically what the Premier Li Qiang has said. So today I'm going to give you a full analysis, and I also want to caution everybody that this is not an anti-China video. This is not a China bashing video, but more importantly, see how we can take advantage of both economy as both economy continue their path forward between the rivalry between US and China. So in the recent history, there are no lack of famous economists and institutions coming out with projection and say that China will overtake US very soon. So Fund Supermart says that China will overtake US by 2026. 2026 is 2 more months. I don't even see that happening. Okay, in UK, CEBR said that China will overtake to be the world largest economy by 2028. Very far away, I don't think so. Goldman Sachs by 2035, Standard Chartered 2030, PwC 2032, OECD, anyway, all these are institutions that say that it'll be near future. The economists, okay, say that you'll be arrive. This day will arrive in 2020. A very famous Justin Lin professor said that it will overtake by 2030, 2025, 35. Bloomberg economist says that 2035. World Bank says that 2032. Well, guess what? Okay, today, okay, Premier Li Qiang says a very bold statement. We will maintain at least a GDP growth of 4% by 20 throughout 2030. And he actually states that the goal is to hit a GDP of $24 trillion USD by 2030. 24 trillion. Take note of this word, okay? 24 trillion. Now, does it mean that you overtake US now? Well, let me give you the number. The US GDP right now stands at $30 trillion. 30 trillion. So even by today's number and the US were to stop, China in 5 years' time also cannot overtake by that projection. And 4% is a pretty strong growth, for a large economy. So today, China stands at about 18.7 trillion US dollars. And that's a pretty wide gap away from the US. And even if this thing grows at 4% continuously, no stopping, and the US economy is much more mature, grow at 2.2%, which is the last 5 years experience, then the gap will close up. Okay. Now, when would that close up if you have a projection like this? That means China continue its powerful 4%, US just tread along at 2.2%. Guess when that will close up? Well, we did a mathematics, right? So the mathematics says this. If they continue at 4 and 2%, they will close up very, very far away. 25 years, 28 years away. 2050, not 2030, 2035. It's 28 years from now, and that has to assume a powerful engine of China continue until then. Well, just to put things into perspective, 4% growth is a very tall order as a country's base increase phenomenally. They have several challenges. They have a massive shrinking population, and when there are smaller population, there are fewer growth. And they have currently right now a property crisis that just won't go away. And their productivity slow down, and there are flight of capital out of China. So you can see right now, you can see for your own eyes, all the companies out there in Singapore right now, a lot of them are Chinese companies. Those retail you can see, F&B you can see, and mind you, they're pretty good. They are already killing many of our companies. They are also in other companies that you don't see. The construction company that you see that building HDB flats, some of them are from China. Those people that build houses, those people that run certain operation in the wholesale business, a lot of them are all coming in, even in the flower business, all of them are coming in. Why are they coming in if the China economy is so good? Well, the frank truth is that as the Chinese economy grow bigger, it gets harder to compound at the kind of rates. So they have to come overseas. There are a lot of China bulls, and naturally they are becoming US bears. I don't know why you have to choose one side. A lot of Chinese in Malaysia, especially by the way, and some in Singapore are extremely culturally nationalistic. I'm not saying it. I don't doubt your loyalty, but a lot of them, I've spoken to them a lot. They are very loyal culturally to China to the point of being blind in the world of investment. I'll just say this again: the U.S. economy, the U.S. stock market is a powerful engine, and I'll just quote Warren Buffett: "Never bet against America with your money." Okay, for hundreds of years, the U.S. economy has weathered wars, recession, depression, crisis, and it has just emerged stronger and stronger and stronger. And I wouldn't take the position against the US in favor of China. A lot of people say, Mr. Lu, why are you so blind, so fanatical about US? Well, I'm not. I don't have any loyalty towards the US. I'll just say this. I spent quite a lot of time in US. I must have met thousands of companies, businesses, startups, venture capitalists, people. You know, it leads me to one conclusion. There is no innovation engine as powerful as the US. It's unrivaled in the ecosystem of innovation, venture funding, and support structure and education whatsoever. Silicon Valley is gold standard in this area, and it drives the innovation throughout not just US but the rest of the world. And the capital market structure is amazing. Just think about it this way. Why does every company, when they want to IPO, they go to NASDAQ or to go to New York Stock Exchange? Because okay, there is a powerful engine there supporting it. And they are very healthy demographically. They allow the top of the brains to come. And the US dollar, despite what people say, I talked about it in a video yesterday, it is the world reserve currency. The rule of law and property rights are really protected. So it is very dominant, and that kind of dominance won't be unseated in the next I don't know 3 or 4 or 5 decades. Well, on that note, I've been to China, and I'm convinced that China is not doomed as well. China is a powerful engine. The people are on fire. You will remain to be a powerful manufacturing powerhouse. I love their products. Their products are cheap and good. It's no longer those days where we look down on Chinese product. Today, almost everybody is dying to buy a BYD for the car replacement. I'm not buying BYD not because I don't like the car, because my lifestyle don't suit an EV car. But they are clearly right, clearly super dominating the world in manufacturing, and their influence is going global, especially Asia Pacific. Singapore, our businesses are being competed aggressively by them. So it is a powerful engine of growth, and I wouldn't write that off. But to the point that we become fanatical that they will become the global leader overtaking US, I don't think so. So instead of taking a position that you're either one or not the other, why just pick one, right? We can have both sides. In fact, we should not even pick both sides. We should spread our investments throughout the whole world, right? So if you were to invest in a globally diversified portfolio, you will pick predominantly US because most of the engine of growth come from US, and you will automatically have to take some position in China as well, which I do in my global portfolios, and plus some in non-China, non-US as well. I think that is probably the wiser strategy, and I think this would propel you to a growth more sustainably in the next decades. Well, Singapore, and to be frank, Malaysia sits in very sweet spot. We culturally are very close to the Chinese. We could speak both languages. And I think Singapore benefit quite a lot as a trusted entity, culturally, financially, rule of law, IP protection, everything, is highly respected. My only concern right now is that there's a lot of money launderers that are frightening the monetary authority. So they are doing aggressive checks and all this, and that kind of frightened a lot of money away. But if we could strike a healthy balance between check and balance and growth, I think a lot of funds will flow in, both from China and from US and from the rest of the world. I think, you know, the best is to take advantage of both sides of the world. And I think Singapore, as well as the powerful manufacturing base now growing in JB, Singapore Johor Economic Zone, I think that'll be a great one. I think my playbook ahead will be this. I'll just say this very clear and consistent on how I bet in the stock market. I form a financial safety net with my CPF, then layer up S&P 500 and other globally diversified index all the way to NASDAQ and some other higher risk assets and things like that. And a lot of this position, quite significant amount of them are on US, not because I believe just in US, but because the world's asset, okay, I would say 70-80% are in US. So by just taking a global portfolio, you naturally will gravitate towards US, and I'll continue to take that position. I would also take a position in China in its share in of the rest of the world. I won't bet individually, but if I buy a S&P 500, some of the companies inside have positions in US, that's fine. I buy a MSCI World Index, inside has some Chinese position, that's fair. I won't purposely go and pick any stocks or a China fund whatsoever. I won't do that. So I still believe in riding the entire AI wave. I think there's a lot more runway to go. S&P 500 hitting 7,000 by end of this month. That's according to Tom Lee. There's a chance for that. I tend to believe it's next month, but Tom Lee believes it'll hit 7,500. If it happens, great. Okay. But I'm prepared for eventualities because I actively rebalance. I just took one big position out. I won't call it rebalance. I'm prepared to buy a car because COE has dropped significantly, thank God. And in the meantime, accumulating dry powder for a big shot to come. If it comes, it doesn't come, it's fine. We ride the wave. That's basically what I do, right? So let's see whether this strategy will work. Thank you for watching, okay? And I hope to see you tonight in my live stream. Okay, bye-bye.